Hi traders, this is a video from Admiral Markets. My name is Chris, and this video's focus is market structure. How does that look like and how can we use it in trading? First of all, though, be aware of this disclaimer. It explains that the trading for exchange is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is not advice and is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. There are, in my opinion, three major basically elements of market structure. That's why I call it the triangle approach, because market structure, I think, boils down to these three things. When you understand these three things and concepts, you will understand the market a lot better and be able to spot what's going on with an instrument or a graph. Now, the first thing that's very important, and that's probably something that you already thought of, is the trend. But not only the trend, it's also very important to look at impulse and correction. So the trend obviously is indicated by the trend channel here in various brown and orange lines. That is a downtrend on the pound USD, and you can see price, or euro USD, you can see price basically moving down in a very good angle and very neat, well-respected trend channel. Now within a trend and then within a channel like that, it's also important to look at impulse and correction. Basically, impulse is where price really falls or rises significantly in a short period of time. So this fall where I have the red arrow, right, the red circle to the red circle, that's an impulse, a bearish impulse, because price is moving in one direction significantly. That's often you see larger candles, you see the closes near the low in this case. In a bullish impulse, the closes will be near the high. And you see that the opposite side, the opposite direction is normally smaller candles. There are less of them, and they're just not as dominant visibly on the chart. That's an impulse. A correction is something where price is more, first of all, going sideways, slight angle or a very shallow angle. The mix of the candles will be there. The closes will not be that near the high or low. So you got more of a mixture of candles, like here, for instance, where I have the green circle, or here, right? There's not really one side that is very dominant in pushing this price into one direction. So that's correction. Now that's very important later on as well. We'll dive into that. The second part, though, first of all, support and resistance. Obviously very important. And how you pick support and resistance, that's something that you will decide as you develop your trading career. Some of you might use just like fractals, for instance, or tops and bottoms, or fibs, and how you define the trend as well is something that you will pick up as you go along. There are different ways of doing that, and you want to find the one that you find the most interesting and most convenient. Same thing for support and resistance as well. Here are some examples of using trend lines. I like trend lines as well. I like moving averages and fibs and fractals. So those are my preferred ways of looking at support and resistance. Last but not least, we got patterns. And those could be very different types of patterns. You have a ton of patterns. Chart patterns, candlestick patterns are one of those, but you could have breakout patterns, reversal patterns, bounce patterns. So there's a lot of ways of looking at the market. But obviously, the market repeats itself. The psychology repeats itself. So that's one way of capitalizing on that, is by looking at patterns. How does price move? Is it looking like a bear flag, for instance, what you can see perhaps in this part, or at least a correction at least? Or is it the triangle? That provides information. And these patterns, in some cases, are indeed built on impulse and correction as well. So there's a link there between them. Candlestick patterns could show, for instance, the continuation of a trend or the end of a trend. So you can combine these three elements to understand the market structure a lot better. So that's the triangle approach to trading. And if you're interested in more webinars, we got a whole new schedule lined up for this week. Take a look at admiralmarkets.com and click on education there. You'll see the upcoming webinars from Nennet and myself. Thank you so much for joining, and wish you all good trading. Cheers.